Good afternoon. Today is Tuesday, it's January 30th, and we are in the second last trading day for the month of January 2024. And market has actually gone higher. We're talking about US equity markets. We have the Dow Jones and the S&P 500 registering fresh all-time highs. And yesterday closing was actually very aggressive because it closed at the very high. So we can see that the only market that has not followed through with fresh high is the Nasdaq 100. So the Nasdaq is basically lagging behind, and but we can see that the blue chips Dow Jones has actually created a new high at 38,343.93, and this is ahead, of course, of the FOMC meeting, the first of 8 for the year. And we can see that it's a 2 days event, and it will finalize on the February the 1st. And at 3 a.m. Local time, Singapore time, we will get to hear the decision by the Federal Reserve, which is going to be likely to be keeping interest rate unchanged at 5.5%. But what's more interesting is going to be what the Federal Reserve Chairman is going to say during his Q&A session, which follows right after the prepared text that he'll be announcing. So do watch out for further volatility going into tomorrow's and the day after's trading. That means Wednesday and Thursday, we should be able to see some kind of volatility. And that also includes Friday, because we're going to have the non-farm payroll as well. So do watch out for all those numbers coming out. It's going to be a very exciting week because market volatility is expected to pick up. So we can see in the S&P 500, like I mentioned, this market also closed at a very high, at 4,927.94, which is not that far away from the all-time high of 4,929.31, which is the cash index. So we can see that this market is geared for higher prices unless there is a surprise in the FOMC, which is highly unlikely. We will probably see further gains in equity markets in the States. And like I said, the Nasdaq is the only major index that has failed to register fresh high. The high traded is 17,665.26, and that was last Wednesday. And the market closed at 17,596.27. So again, this market is also poised for higher prices, despite the less than ideal earning reports from the tech sector, except for Nvidia. So we can see the other tech stocks has not been doing very, very well. So we want to see how this market performs going forward. And over in Asia, we can see the Nikkei 225 remains basically unchanged at 36,100. No major reaction here ahead of the FOMC. And we can see that the market is getting cautious because last Tuesday, when the Bank of Japan do hint that they may be looking to normalize interest rates somewhere in April. So the market right now is going to be very cautious trading forward in regards to the yen and in regards to the Nikkei 225. So any kind of change is likely to be a negative, and we probably will see prices coming down in the Nikkei if there's going to be any truth in the normalization of interest rate in Japan. Okay, and over in Hong Kong, we can see that Hong Kong prices has pulled back a little bit, and of course we knew that the Hong Kong stock exchange has actually wanting to delist Evergrande. In fact, they want them to be declared bankrupt. Basically, they are sending them as insolvent. So that is actually putting a negative spin on the recent rise in Hong Kong equity markets. But you can see so far, despite this news, the market did not react very negatively. We have seen a three-wave pullback from a high of 16,313 to the low this morning at 15,721. Assuming there's no further deterioration in the prices in the Nikkei 225 futures, we should be able to see another bounce going forward, targeting 17,000, and that will be a nice rally going forward. And over in the dollar, we can see dollar is actually quite firm going into the FOMC meeting. Last night we have the highs traded at 103.64, which is the highest so far for the year. Although the market did close a little bit weaker towards the closing, but you can see prices right now is actually quite elevated, waiting for some kind of confirmation that the Federal Reserve may be holding interest rate for higher for longer. In view of the softening of inflation numbers from the CPI, from the PPI, as well as from the PCE numbers that we saw last week. So by and large, we should be a little bit biased to the upside for the dollar. So that should be able to give us a rally towards 104.22 to 104.44. And if we do get a pullback into this bracket of prices between 102.55 to 102.95, that could be a good buying position for a short-term gain towards 104.20. Over in the euro dollar continue to weaken. Overnight, we have a low at 107.96, and this is also causing the market to actually look for a challenge eventually to 107.24. So depending on how this market pans out, actually I was hoping the market will bounce before it comes back down, but right now the market is on the downside of this range, and immediate test of 107.25 is more likely than a bounce currently. Okay, and in the sterling still maintained that slightly biased up, bullish outlook in my opinion. I think there is enough momentum to keep the sterling alive towards a challenge of 127.85, perhaps even above 128.27 over time. So I still keep my target at 129 for an eventual test of that level. And over in the Aussie is actually bouncing up a little bit, but today's we have the retail sales came in which was a disaster because the market came down negative 2.7, very much lower than market expectation. But still, the Aussie managed to hold its own, but I do not think it will last very, very long. If the market do bounce back to 0.6640 to 0.6660, I think that could be a range in which we can take a short for a dip below 0.6525. Over dollar Canadian is basically quite bullish. We have a three-wave classical pullback, and the market currently is trading at about just above 134. I think this is a good area to pick up some long position for a challenge of the most recent high here, and that will be 136.20. So I think there's a good chance the market will go up and challenge this level, and let's see if that's going to be the case. Dollar yen also remains very, very well bid. Market now is drifting, not really going anywhere, and that's basically telling us that the market is actually quite supported. If we do get a dip back into the 146.40 to 146.85 levels, that could be a buy position for the market to go beyond 148.80. And because the talk about the Bank of Japan normalizing interest rates may not happen until April. So from now until April, there's a good 3 months. Anything can happen, and until that changes, the interest rate differential between the US and Japanese rate actually favors the dollar yen to the upside. Okay, so do watch out for that as well. And in the precious metal, you can see precious metal has also gone sideways with a little bit bias to the upside, at least for the near term. I do suspect that it's going to be a three-wave bounce into the $2,047 to $2,055.80 levels, and that will be a good level, in my opinion, to take up a speculative short position. I think I will do that as well for a move to challenge the $1,973 that we saw in the middle of December. So this will be the game plan: higher to sell and then buy back around the $1,985. And over in the silver, we can see silver is basically sideways. The market has already gone above the December, November, October high, although the market has not been able to hang on to its gain. But this is a good development, because if we end January, which is going to be 24 hours from now, if we end January on the positive note, especially above the October close of $2,728.10, that will put a positive spin to the spot silver market. So let's see how it closes by tomorrow. Okay, and over in the Bitcoin, we can see Bitcoin continue to edge higher. We have a challenge of 43,780. I think the market is getting very, very close to a temporary top, because this is where the market hit the 50% retracement level from the high of 48,965 to the low of 38,514, and this is exactly at the 50% mark. And if we do get a reversal signal here, that could be a situation calling for a sell. If this sell actually pans out, maybe what we can see is at least a challenge of the 40,000 levels first. And if this level fails to hold, then there's a good prospect the market will go below 38,514 towards the 32,000 levels. So I think this is going to be the target for me, 32,000, whether it happens now or happen at a much higher level. But I think basically my bias has shifted to the downside, considering that the market has not been able to recover meaningfully since the market top out at 49,000. So this is all I have for you for today. In the meantime, you take care. I'll come back to you tomorrow with further updates. Bye-bye.